Land Turner is a seasoned finance educator with over 2 decades of trading experience. He's taught at prestigious institutions such as the Chicago Board of Trade and Mercantile Exchanges, Utah State University, and currently Utah Tech University. As an entrepreneur, he's the founder and driving force behind Gecko Software, developers of cutting-edge, award-winning trading platforms for the financial markets, stocks, futures, forex, and options. His brokerage firm, Gecko Financial Services, also specializes in futures, options, and forex trading. Mr. Turner is the editor-in-chief of Pitt News Magazine, offering valuable insights for traders. Beyond finance, he's also an avid real estate investor and private pilot. Explore Mr. Turner's contributions to the financial industry online at trackandtrade.com, geckofs.com, and pittnews.com. It's great to welcome you to our community. Now, here's Mr. Turner.
Good morning, everyone. My name is Land Turner. I am your substitute teacher for the day, in for Dr. Scott Brown, who's on vacation. And I'm happy to be here, and I'm going to introduce to you today a secret charting program developed by Dr. Scott Brown that I bet he hasn't even told you about. How would you like to learn about his secret weapon? All right. The name of the program is called Chart Miner. Now, believe it or not, this is actually Dr. Brown's program. For those of you who don't know, my name, again, Land Turner. I own a software engineering developing firm for the financial markets. We develop software for the financial markets, and Dr. Brown came to us and said, can you develop for me a secret little program that I can use to help me find charts or markets that I can trade? And so we made an agreement with him. We bartered a back and forth deal, and we developed this software program for him. Now, I don't know if he's introduced it to you. Maybe he has, but I tend to doubt it. I've watched a lot of his videos and haven't seen him talk about it. So here it is. I'm going to show it to you, and I'm going to show you how he uses it. Now, many of you have heard him talk about his lizard brain and how he just looks at things from a very... What he's trying to say when he says he's just looking at it from his lizard brain, he's just trying to say that he looks at it from just a quick, is this market going up? Is it going down? What do I see here? I'm not trying to analyze it with mathematical models or fundamentals or technicals. I just want to look at a chart and have it flash in my brain and say, oh, it's going up, or oh, it's going down. A lot of students or a lot of traders, when they very first get started, they come in and they have a lot of success right out of the gate. And we call it beginner's luck. Right? I mean, there's a reason why we call it beginner's luck. It's because it actually happens. And the reason is because beginners come in and they look at a chart with their lizard brain, and all they see is, oh, the market's going up, so I guess I'll buy. Or, oh, the market's going down, so I guess I'll get out or sell, go short, right? And so with your lizard brain, that's what Doc Brown wants to tap into. He wants to tap into that beginner's luck. And now, so what we do is we take away all the technical analysis, because what we have a tendency to do as traders is we try to complicate things. We take something that's very simple, like, oh, market's rising, I guess I'll get in, and we complicate it. Oh, let's add stochastics to it. Let's add MACD to it. Let's add RSI to it. Let's add stochastics to it. Oh, now we got to do our trend lines, and we got to draw this, and we got to draw that, and is it in a triangle or is it in a wedge? And we complicate something that's very simple. Oh, the market's going up, I guess I'll buy. So that's what Doc Brown is trying to tap into, and he did that with Chart Miner. There's nothing in here. This is it. The whole program is right there. It's a very simple program, and what we do is we come in, and he's gone through and he has picked, if you go into settings, he's picked all of his favorite stocks in the stock market, and they are listed in here. So it's a combination of stocks across the stock market. It's not just all the S&P, all the Dow, all the Nasdaq, not his top 100. It's all the stocks that Doc Brown feels like he wants to, or are good opportunities for possible trades. And now you can come down, and because it is a relatively large list, you can break it down into smaller component pieces, and you can get just the ones that you want, or just the ones that Doc Brown feels are the most important. So we're going to come into the mining section of Chart Miner, and you'll notice we have a drop down here, and we can go down and we can find any individual stock. Oh, you want Devon Energy, you click on it and it pulls up that chart. But the whole idea is, back in the olden days when we got our charts in the mail, you used to have this big chart book, right? And you could flip through them and you could see, just with your lizard brain, what each chart was doing. And you could flip through them really fast, and you could go through hundreds of charts really fast on a piece of paper. Nowadays we got computers, and it's like, oh, well, if I want to see what a chart is, I can't just flip through a whole book of charts. I have to actually know the symbol, and I have to type it in, and I have to click a button, and I have to open that chart, and then it's like, oh, what's another chart that I might want to look at? Oh, you type in that symbol. Oh, you do a little research on the internet. Oh, you do whatever you need to do to find the symbol, and you type it in, and you pull it up. So you lost that lizard brain ability to just have flip charts just sit there and spin across in front of you that you could just look at and look at volume, and you could look at the trend, and you could say, oh, that market's going up, oh, that market's going down, oh, it's on a pullback, I want to get in on the pullback, you know, buy low, sell high, buy the valleys, sell the rallies, and you just want to see a whole bunch of charts go past you as quickly as possible, and that's what this program does. So what I'm going to do is I'm going to demonstrate how that works. All right. Now I'm going to drop down through here, and I'm going to go about halfway through the list. And the reason I'm going to go halfway through the list is because I have a tendency to always start at the beginning of the list. And so all of my trades, and people have pointed this out to me, Lan, why do all of your trades start with A, B, C, and D? Because by the time I get much further into the alphabet, I've found a whole bunch of opportunities, and I just trade the A, B, C, Ds. So we're going to come down here, and just for fun, I'm going to start halfway down. I'm going to start in the, let's start with the J's, okay? We're going to start with J. All right, so we're at Jacob Engineering, and I've got this set to the stocks within the S&P 500 that Doc Brown feels are the most important stocks within the S&P 500. So now we're going to go through, and you see I've got these little arrows up in here, and I can just start flipping through the charts almost as fast as I can click the button. All right, and the software is just fast and quick, and I can just drop through here, and I can take a look at markets, and I can say, you know, I don't even look at the name. I'm like Doc Brown. I'm just using my lizard brain, and I'm saying, hey, wait, look at that. What's this market doing? This is Keysight Technologies. I'd have never thought to pull up Keysight Technologies, but it's been going along, and now it's had a pullback. We got large volume in here. Maybe there's an opportunity to buy low, sell high on this one. All right, so we can just keep going through with our lizard brain. We can look at these markets, and we can say markets that are in an uptrend, that are in a pullback. That's what we're really looking for, right? Markets that are in an uptrend but have had a pullback. Oh, here's one, Kroger, the Kroger company. It's a food company, right? So we can come in here now. If I want to add this to my portfolio, I just come up here and say add to portfolio, and that's all I have to do. And now I can start scooting on through them again just as fast as I can push the button. It'll draw the screens for, oh, look at that, we got a nice big volume bar in here. This market looks like there's a possibility it could continue higher. It's a nice channel, lots of volume. Maybe might be something we could look at, but let's see if we can't find something. Oh, there's something that's pulled back quite significantly. We could look at that one. We could add that one. Here's another Lindy, whatever that is, L Lindy. Look at this one here. There's a good opportunity. That market's pulled back, lots of volume climbing. Not the perfect little setups that we're looking for, but hey, some stuff's coming up that maybe we can add to our portfolio. And as we come through, we just add them to our portfolio. There's Lowe's. Hey, I'm going to add Lowe's to my portfolio. And I'm just going to scoot along here, and we can see very quickly and very easily. Oh, what about this one? Las Vegas Sands. That's been beaten down a little bit. It's been high. Look, back in March, it was clear up here around almost $60, and now it's all the way back down to $40. That might give us an opportunity to buy low, sell high, right? This market turn around, start to rally once again. We add that one to our portfolio, starting to get some volume in there. So we're just kind of look for markets that look like they're pulling back. Oh, look at this, MasterCard, a little pullback. Oh, MasterCard's a great company. Let's add that to our portfolio. Come along and see if there's anything else that's on the pullback. Hey, what's that right there? Marriott International. That's a travel company. Not real thrilled. A lot of people doing traveling. I don't know. Maybe it's been rallying really hard. It's pulling back. The rest of the stock market rallied. It's pulled back. Maybe it's just a lagger. Maybe we could add it to our portfolio, at least put it on our watch list, right? So as we just keep pumping through here, we're going to find charts. Oh, look at all the big volume on that. Lots of big volume. Of course, it's down volume. The market's coming down. But maybe that's a pullback. Microchip Technologies. Hey, we're going to add that to our portfolio. And then we're just going to keep coming along. McKinsey, that's breaking new highs. Not interested. We want stuff that's pulled back. I like to buy low, sell high. I'm not interested in buying high and selling higher. And a lot of people are. And if that's the kind of trader you are, you like to buy high and sell higher. What's that? Well, there's one right there. McKesson. You just go in there and say, hey, it's at $5.90. Buy high, sell higher, and then buy that one right there. All right? So you can come in here and you can add these to your portfolio. There's Mondelez International. That one's had a little bit of a pullback. And we could sit here, you know, for hours looking at these different markets. There's another one that I like. Oh, what's that one? MGM. That's another casino stock. Let's go ahead and add that to portfolio. And we just keep rolling on through them. All right, I think we got enough. Now we're going to come in here and we're going to go to the portfolio section. And there we are. There's our list that we just selected. Now what we do is it's very easy. We just come over here, can copy these. We copy those out, and I hit copy just like that. Right-click and copy. Now what I like to do is I like to pull them into an Excel spreadsheet. So we get a new Excel spreadsheet. We paste them in there. We just grab all the symbols just like that. We hit copy on the symbols there. Now I go over to track and trade, and I drop those symbols right into the open symbol list. Hit paste, Control V, open symbol, boom, 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 boom. There's all the stocks that we just picked in Doc Brown's secret chart miner tool. All right, so now we can just roll through them over here. Now we got the bulls and bears, which is telling us when it's good time to add on to these different markets, right? So most of this type of trading I like to do. I mean, now there's difference between trading and investing, and you have to look at things from a different standpoint, whether you're trading or investing. If you're investing in a market, you want to just kind of dollar cost average in. As markets pull back, you add into it, right? And as it rises, you let it rise, and as it pulls back, you add into it, and as it rises, it rises. So we look for our rising opportunities, or our opportunities to add on to our existing positions if we've already got it. If we don't have it and we want to add this to our long-term portfolio, we just wait for the bulls and bears to give us a buy signal, and you can add on to it. Now if you're looking for an option strategy like Doc Brown generally likes to do, you look for an explosive market, you want to wait for these things to pull back and then turn and start to rally once again. Once they start to rally, you can get in with your options, right? So there's specific setups and strategies that you can look for in different ways of trading the market. So here we're coming down. We're still coming down, still coming down. We can wait for this market to turn, give us another buy arrow. Here's a buy arrow. Maybe we would have put a few shares in there. I'm going to talk to you a little bit about the way that you count and measure these markets. We talked a little bit about that in the last class, how we're in different drives and how we count and measure these different drives, and look to where we're getting into high probability turning points and where we don't. And if those of you who went and got the manual based on our last class, you know that this was been a low probability trading point, so we probably wouldn't have added in there because that's a low probability trading point, right? It's an A1, so we don't want to get in on A1. So even though we got an arrow on an A1, we'd say, well, it's an A1. I'm not going to take it. I'm going to wait until the A2. That's what I like to do. I like to wait till A2s. And if you don't know what I'm talking about when I'm talking about A1s and A2s, I have a book, of course. If you go out to Amazon, you're going to find the book. It's called The Fibonacci Effect. It's by Lan H. Turner. Just search Lan H. Turner. There's a couple of my old books, old versions out there. There's a green cover book. I don't know why the Amazon won't delete it and get rid of it, but you can get the new book. Make sure you get the one that looks like this. This is the new cover. You can take your little cell phone and you can click it on that little Amazon.com icon right there, and it'll take you right to the book that you want to buy. And then you can add it to your cart, and it's a 238-page book that teaches you all this stuff that I'm talking about in here. All right, how about you count and measure, how you do your statistics and statistical analysis of the markets. It's got all kinds of wonderful stuff in there, and I would recommend you pick up that book. It's the manual to my classes, and that's where we're at now. So this is the Lowe's market, and it's coming down. We're going to wait for an A2. This is an A1 right here. Not real fond of buying A1s, so we're not going to buy in on an A1. But when we get an A2, that's an okay place to start. Or not an A1, A2. I'm sorry, it's a B1. When it gets into a B1, and that'll be outlined in the manual, show you how to do that. When we get into a B1, that's where we want to start maybe adding into our positions for a longer turnaround. All right, so we're going to look for a little what we call a head and shoulders formation. Right, those of you who are familiar with head and shoulders, we'll look for a little head and shoulders formation down here, and the possibility the market could turn and start to rally back up again. Now, if it does go down one more level, we have to bring this whole head and shoulders thing down one more time, and then we'd have a C1 down here, right? So then we'd have C1. So it would go down to the C1 drive, and that's where we'd dollar cost average into this market. If we get down, up, go to B1, we get in, and it's like, well, it decided not to. It goes down one more time. Now we're going to have to wait for the C1 to get in, and then we'd have to move our anticipation of a continuation of the uptrend over here. So that's how we do that as we move things forward through price and time. Now, Doc Brown's going to wait for an explosive reason, right? He's going to wait for that market to shoot up and have a nice explosion and a good reason to get into a market. You can do that too, or you can wait for it to cross the mathematical boundaries that we talk about in the manual. There's your spider web, as I call it, right? And then you have the horizontal right in here. So you have your little spider web in there, and as it starts to cross those blue lights and starts to rally, that would be the changeover from a bearish market to a bullish market, and we should get an arrow in there as well. All right, so then we're going to come along. There's the Sands Corporation, and so we have Sands coming in here. And notice that we're coming off this little topping formation. We're into a drive 2, drive 3 down in here. So we have this little sideways market, nice big drop, drive 1. That would be an A1 right there. Now we're coming in. This is a B1 right in here. So this is our B drive. And then, of course, if it goes down, and this is the same thing. If we come down and we do a C drive, we would take this little head and shoulders formation right in here. And if it comes in with this drive right here, this is where we would anticipate the next rally up and out, right? Because markets move through waves, and so this is the pattern we would look for. If it breaks and cracks and comes down and breaks this head low right here, we'd have to, again, move this whole thing over one leg like this, and then we would go down and look for the next leg, and then we just move this anticipation of the rally back up. All right, so there's MasterCard. MasterCard's another one. It's come down. It's in the, there's a big drive 1, drive 2. That almost wants to be combined, doesn't it? Although that's got a pretty good little counter trend in there, little spider web right there. And that came down and then failed and started to rally once again. We got a nice little double bottom in here. So we have to decide if this is a good place to be starting to get into MasterCard. It came down and touched that 200 period moving average and started to rally. It looks like a good place to me. I'm kind of liking this MasterCard. We may have to do something with this one. I want to wait and see if we get some confirmations, a break of the blue light, a nice little arrow from the bulls and bears, an indication that the market's changing from bullish to bearish. Again, this would be our, that's a double bottom, and it's not really a head and shoulders formation. You almost want to draw this in here like this, don't you? Kind of want to draw that little head and shoulders in there in anticipation that this is that right shoulder and away it goes. If it comes back down and breaks this right shoulder right here, we'd have to redraw this whole thing over like this and then anticipate the change over here. So this would have to come out like that. We're going to get our little neckline here, wherever this comes out, probably right in here somewhere. And then we get our right shoulder down in there, and then we have to move this out one more. All right. So we could get that, but that's if it breaks down there. Then we're going to have to go even farther. We might have to go one more. But I don't know. MasterCard, we're going to have to look at some of the fundamentals, but nonetheless, technically speaking, this thing looks like it's coming into a nice opportunity to take some long positions right here. Going to keep it on the radar. All right, next one is Marriott. Marriott, once again, same thing. We got a nice, let's see what that is. That's a 4-drive pattern. Drive 1, drive 2, drive 3, drive 4, and that's really rare. Usually we only get 3 drives. Once it gets above the 3 drive, we don't, as small speculators, want to take the 4th drive because that 4th drive usually fails and then turns and starts to come back down again. So here we got this market coming down. Here's the 200 period moving average. Looks like to me here Marriott's getting ready. This is drive 1 on the way down, right? Drive 1. This is our counter trend, and we're coming in with this one. We're coming into the B drive as well. So there we're getting a little head and shoulders formation to the downside. There's your left shoulder, and we may have to make that same type of move. We'll get a little rally, maybe a little pullback, and another rally up out of there, and that would be kind of a confirmation. We could get into this market and start looking for a long position. The last one we've got on our book is this one comes down here, and we got a little rally right here. We're getting that same basic pattern, right? So the same basic pattern. That's the spider web. This is what we call a Wyckoff spring, and I'm sure Doc Brown's talked to you about Wyckoff springs. And so we come in here, and this is your left shoulder once again. This is your neckline. That's your head, which breaks down, becomes the Wyckoff spring. Now we got a little right shoulder in here. We're just kind of probably get up here with this little natural trend line. If it hits that, it breaks through, pulls back. It can use the trend line as support, but right now it'll probably use it as resistance. So we'll look for it to come up, touch it, pull back down just a little bit down here, and then we'll look for it to rally and come back up out of there. And that's where we might want to be a buyer right in there. As this little thing comes up. And if it breaks up here and then comes down and touches this and goes, you know, basic same location, we're going to want to be a buyer right in here. So that's how that one's looking to pan out on MGM Resorts. And that is just a quick summary of how we use Doc Brown's Chart Miner program. You say, well, what? Where do I get that Doc Brown's Chart Miner program? Well, he kind of uses it himself, but we do make it available because I am a software engineering firm. We stick it out on the web, and we let other people buy it too. And that was part of the agreement that we had with Doc Brown, is that we would develop it for him as long as he allowed us to put it out on the web and let other people buy it. And there's the website right there. It's just called chartminer.com. So you can go out to chartminer.com and find Doc Brown's little program. There's a little video that kind of shows you basically the kind of stuff I showed you. And today we also found a couple of stocks for you to trade. Possibility of having a few money-making opportunities in there. All right, guys, if you have any questions, please let me know, and I will see you guys possibly tomorrow. Take care.
We hope you enjoyed this window into Dr. Scott Brown's Chart Miner secret weapon. As always, we want to remind our traders that the market is full of opportunities, but not without risks. Past performance is not necessarily indicative of future success. Stay engaged with Stock Market Trading Channel for more insights and expert analysis to guide your trading journey. If you would like a copy of Mr. Turner's 220-page workbook, the manual to this class titled The Fibonacci Effect Stock Market Playbook of Strategies, search Lon H. Turner on Amazon.